Welcome, everyone, to the Trader Kings Talk produced by CoinW. In this episode, we are privileged to have invited Turkey, an excellent futures trader from CoinW, to join us and share insights into recent trading strategies and market trends. Now, let's start by asking Turkey to provide a brief self-introduction.
Hello, everyone, good evening. I am Turkey, an analyst, and I am truly honored to receive this invitation to participate in CoinW's futures experiment. It's like a futures-related experiment, and I've ventured into opening various futurists. Let me briefly introduce myself. I am an individual with 8 years of experience, dedicating these years to personal investments. My focus includes daily sharing, staying updated on news, and conducting research to support my trading decisions. With approximately 8 years of experience in the industry, my current primary focus is on daily news, on-chain data, and, predominantly, sharing insights on a macro level. I playfully refer to myself as Turkey Analyst, emphasizing my inclination towards macro analysis and being a medium to long-term investor.
Thank you, Turkey, for your participation and support. Now, let's move on to our interview segment for tonight. Our first topic is about your current positions. Could you share with us the types of positions you currently hold in spot trading? What cryptocurrencies are in your portfolio, and have you opened any recent positions? Also, can you elaborate on the leverage ratio and profit levels?
Sure, I can provide an overview of my current positions. In terms of capital allocation, I hold only 10% in Bitcoin in a large capital scenario, and within that, 5% is in USDT. I've opened a threefold short position, entering at 26,600. The idea behind this was to hedge when the price fell below 28,000. Currently, the hedged position shows a negative return of around 15%, considering the 10% hedged. Excluding the hedged portion, the loss is around 4 points. In terms of my personal investment strategy, 2 crucial points guide me. Firstly, identifying high probability events, predicting market directions, and understanding the movement of specific coins. Secondly, every position has stop-loss and take-profit settings, aiming for a smaller probability of loss for a potentially higher rate of return. My stop-loss is usually between 3 to 5 points, and take-profit is set at approximately 15 to 20 points. With a 5-fold leverage, the risk-reward ratio typically ranges from 4% to 20% in losses for potential gains between 50% to 100%. I initiate positions only when I believe I can achieve such a risk-reward ratio.
Thank you for sharing, Turkey. Given your extensive experience in trading, let's discuss your most profitable single trade this year.
I can share my impression since I haven't checked my account recently. I recall 2 significant instances. The first was during the initial bull run when Bitcoin experienced a drop, rose to around 20,000, dropped back to 18,000 to 19,000, and then surged to 27,000. I sold midway, missing out on the latter part of the uptrend, but the return was approximately 20%. The recent memorable trade was at 24,008, a point where Bitcoin surged to 31,000 and then dropped. I don't recall the details, but around 24,800 was a significant point. I had a position, and if it dropped below 24,900, I would stop the loss. It triggered my usual stop loss, and I closed my position, which was not initiated at that point. It was more of a spot sale. I later compensated by buying back at 24,000. The overall cost was within the range of 24,800 to 25,000. During the final surge, I sold at 29,500, resulting in a profit of around $4,000, roughly a 20-point return. These 2 trades were spot operations and generated substantial income with a significant position.
Great insights, Turkey. Now, looking ahead, how do you analyze the future market trends? And are there any specific trading opportunities or sectors you would recommend for our audience to focus on?
Certainly, let me share my perspective. As I mentioned earlier, I have reservations about the overall market trends from August to December. This is primarily due to macroeconomic factors, with the Federal Reserve approaching the end of its interest rate hike cycle. There might be one more interest rate hike this year, with a probability exceeding 50% in December. After the rate hikes, there will be a transitional period of high interest rates. During this phase, financial institutions, especially those dealing with the U.S. Treasury bonds, will face immense pressure. The current scenario with rising interest rates has already set new highs in US bonds, reaching levels not seen since 2007, before the financial crisis in 2008. This is concerning, and we need to guard against the possibility of a macroeconomic storm or a potential crisis. Secondly, the short-term liquidity in the commodity market is currently low, leading to subdued liquidity and volatility. Weekends often result in sideways movements, and Bitcoin's historical volatility has reached a low point. Additionally, the market value of stablecoins has hit a low since September 2021, possibly influenced by the USDT incident on Binance. Despite this, considering the investments from A16Z and Sequoia Capital, which have shifted some focus from the cryptocurrency market to AI, it's evident that without strong trends and significant positive factors in the second half of the year, it's challenging to see a burst of upward momentum. If there are areas to watch closely, it would be the policy landscape, particularly the implementation of stablecoin solutions. Another crucial point is the application for a Bitcoin spot ETF. However, it seems unlikely to be approved within this year, given the ongoing internal issues and potential legal challenges in the United States. The coordination and resolution of internal policy factors might take some time. Considering these factors, I personally believe that until December or even the first quarter of the next year, there might not be substantial possibilities for a major market trend. The highest point we might reach is around 31,000. Regarding potential sectors, I am closely watching 2 or 3 areas. Firstly, real-world assets, RWA, which involves tokenizing physical assets in the real world. This is a trend that might gain momentum in the future. Secondly, Layer 2 solutions like Arbitrum, ARB, and Optimistic Rollup, OP, and soon ZKS and RKS, ZKS, and Starkware. Both ARB and OP have already made progress, and even though their valuations were a bit high in the short term, recent corrections have made them more attractive. If Bitcoin continues to decline, these technologies might become stars in the future. Additionally, ZKS and Starkware, which are yet to release tokens, are sectors I am closely monitoring. The third point is the potential existence of decentralized gaming contracts in the cryptocurrency market. The protocols related to decentralized gaming might be a significant focus in the future.
Thank you, Turkey, for sharing your valuable insights. This has been an informative and enlightening discussion. For our audience, you can follow Turkey on his Twitter page, and if you're interested in real trading, you can use the invitation link shared in our tweets to register a trading account. Once again, thank you Turkey for your participation.